Good morning, everyone. So the jobs report wasn't what was hoped for, and markets are down. As ugly as they look on the 5-minute chart, they're really not down an amount that they can't recover from. We'll have to see if that happens. You can see the spiders are still above the 200 MA. I guess we'll see how they react after being down there for 15 minutes or so, whether they immediately rally back up. Just looking at this little initial slowing in momentum here, an attempt to turn higher got knocked back down, which isn't uncommon until you get closer to the open, whether it's really going to be able to turn around. So we'll just see where things are at here. Just above the 200, gapping below the green bar, bottoming tail bar, and so on. If that was to close like that, we'd be thinking for sure it would go lower, but it's early, a little after 9 o'clock. It could turn into another bottoming tail bar. Yet to be seen. However, what I took notice of, I always look at, does the present situation similar to the past or not? So looking at SPX, those are the numbers for today. Could it get down here? I think that's unlikely. You'd have to hover around here and the day really turn into one nasty, ugly day. Now, there's a lot of open interest in puts that are betting that it's going to go down here. So this would act as a level of support. Doesn't mean it can't go down there. Just a very, very far distance to get there. Just checking numbers again. And moving a lot. So now it's 41.35 since it moved up a little bit. So, it's going to be an area down here. If it continues to dive at the open and you can get below 41.20, absolutely do that. I'll have to keep an eye on that. But these red arrows that I put on here, these are the two previous jobs reports. So this is where prices had just begun to reach. The internals got to an extreme up here. And there was this gap reversal day. I forget what happened. And this was the day of the jobs report. Started a decline. This was the previous jobs report in September. And you see what happened. Down. Recovered a bit, wiggled around, wait for more information. I think we're waiting for Fed announcement, whatever it was just this period of going nowhere. And so here we are now, jobs report and prices hovering right above the 200-day moving average. And we look at our internals, and as mentioned earlier, was it yesterday? The day before yesterday, all of a sudden, option traders are betting on the market's going to crash. Look at this line. This line hasn't been down here through these lower bands down at this point, and it'll probably be a little lower maybe by the end of the day. I'd have to say years. Breadth isn't so bad considering how much things are going down. So there's a little bit of underlying strength there. We'll see if we have to see what happens today. What's the reaction? That's really the bottom line. But as we look at, these previous times, and think about, could use the word as, what's the gas in the tank as far as fueling prices to go lower? And you see here is where, the internals had just reached this extreme. And on this report, breadth had reached an extreme, but sentiment was still bearish. And sentiment has stayed bearish this whole time. And so now they're betting on the market's going to crash. And let's say maybe it comes down here. That's not a crash, right? But would they be profitable trades if it went down there? Well, absolutely. I think there'd be a pretty big reaction in 2 weeks. In the options expiration 2 weeks from now, there's a very large open interest at 4,200, which is up here. 4,200. There's it's like half of that at 4,100, and so on. So if it starts hovering here, let's just look at what today is. 4,200 today, expiring today. So opening down here, these traders holding these options that are going to be very profitable at the open. They thought, oh, what if it goes down to 4,100 and I, my profits increase exponentially? But what if it starts to rattle around and starts coming back up? That could help drive it higher. So we'll have to see what the reaction is in the first, 5 to 15 minutes as to what the reaction is, because that could help drive it up. And 4,300 would absolutely be a very large resistance area, but at the moment it seems inconceivable that it would get back up there. But if it opens here around this 4,200 and at the end of the day is a green bar, I think we'll be relatively confident that a short-term low is in place, and with the sentiment being what it is, that would support it. Now we just have to see what actually happens. This is always the way, right? When things set up as to a situation when we're looking for a turn, we have this scenario where news has come out. We have our internal guides telling us, where things were in the past and now. As we look at interest rates, you see the 10-year spiking up here. It's not at this 5%. This was part of our discussion in MT Live. And what I've been talking about in the advisory newsletters as to what could set up a low. And so the dollar is up this morning. So, the dollar coming up into this area, the 10-year getting up to that 5% area. This is the 30-year. And if we put that on monthly, you can see it's coming up into this very large area of overhead resistance. So we can think about all the economic reports that are coming out and so on, but as technical traders, I'm looking at what's to the left and saying, well, we warned about this beginning to rise way back here and the risk for the markets. It's coming up into a very large resistance area. The dollar is coming up to a very large resistance area. We've already seen oil drop significantly. So I think there's less likelihood that this is the start of a significant leg lower based on what I just pointed out. And we'll just have to see how it plays out. It's really just the bottom line. Transport's what we've talked about. That's already down. They're already down quite a bit. Airlines have been destroyed. So it's down. It's down a lot. Maybe it goes down a little bit more. Based on what we're looking at, I think, I don't know, maybe sometime next week it can turn around. We'll see what today does. The Russell is down here, give or take. Right? It's at the bottom of the trading range where buyers have been before. Just looking to look at TBT. Sometimes it's a little bit of a different spot. That's way up. That's way up there. All right. Anyway, it's got to be getting close to where the 10 and the 30-year are now. And let's just look at the Dow, which is going to be negative on the year. I'm sure it's going to be gapping down. One of the few major market indices that will be negative on the year, coming down. See if it comes down to this pivot low. And it will be, figure down here where that pivot low is, be closing that void. We'll see if it holds there. And it's really what today is going to be about, to see whether this large move to the downside is exhaustion from the warning signs that started up here. Leg down, consolidation, another leg down, gapping, could be exhaustion, gap into a support area. The internals are, getting cooked. This, breadth could have been worse, which I would have liked. Something I can't show here, but those of you that look at TC2000, I can give you the internal to look at, but look at the percentage of stocks that are above their 40-day moving average, and look to the left, and it's down at where prior turning points have happened in the broader markets. So that's another piece of information that supports that prices shouldn't go down a lot more. But we'll see. I thought maybe things would have went up a bit and then things would have rolled over in the middle of the month, but it may go up after today. And so look, we'll have to see how things hold up, or the lack of, in the first few minutes here. Bitcoin is down. It's just been wild. But the believers are still the believers in this, and so far it's hanging in there. And you see the gap down isn't breaking through. Tech has been showing some relative strength, and it's gapping down, and you see it's beginning to stabilize here. So just seems like institutions, whatever they're looking at, while they're startled by this number, they've been holding prices here, and I think the first 20 minutes or so are going to tell a lot of the story. And of course, by the end of the day. All yours, Dan.
Well, you're early.
What was that?
You're turning over early today.
Well, it's pretty much the same story wherever you look. And bottom line is what I said. No need to repeat it. Well, now we'll see what happens.
Yep. And Q's, we're working on conflicting 180 reversals. And I said yesterday, I was hoping we would close low, but look, we had that afternoon rally, which made this bottoming tail, which is bullish. So I said yesterday, provided we don't get a big, ugly gap, which we are, it's gapping under yesterday's low, or right to it, then, today's Friday over Wednesday's high, then first target gap fill, second target 50 MA. So now we have a gap to deal with, and that's why we didn't get aggressive yesterday. Had a lot of long ideas for a bounce, and I still have them with alarms and so forth. But what if we negate this again and close back near the high? Then even though it's in a downtrend, Monday, I think we'll get amazing 1 to 3 day bounces, put spread directionals. Getting a nice bounce right now off these pre-market lows I see here. So always take it like always. So if we hold 30-minute high, I think we'll find a lot of 0 DTE put spreads for today. Let's see what we have here. A couple earnings. Ether, we actually did what's called a condor into earnings. We shorted the 35s way down here, 35 $5 put spread, and the 60s. Can't even see them on this chart. Looks like Wow, that's all-time highs. Wow, this thing came out of a coma at $3 in 2021. So even with the gap, we took in 90 cents. So even with this gap down, we're going to be feeling pain on the put side, but it's still $3 out of the money. So I'll be looking to close it at the open and just be done with it. Camp. It's a penny stock up and down. That looks like it might be headed to zero. Levi gapping down to 13 in the downtrend. No interest. No earnings of interest today. Let's just, what else do I have here? Some pre-market news. XOM is looking to buy PXD. So this is on my list for a zero DTE put spread, possible exhaustion gap, but I need it to turn intraday. That's why it's in this middle chart right here. I'll be watching those two, and they're talking about buying PXD here, getting a big gap up. Remember Clorox? They pre-announced yesterday, and they said they're losing a ton of money on being hacked. Same thing with MGM. That's part of this collapse, even though all the casinos or hotel casinos getting whacked, along with leisure stocks. And so I saw a headline go by on CNBC saying that they were estimated to lose $100 million on that hacking. Now, I didn't see an article or whatever, but I'm just curious. Like, where does that number come from? Like, you can speculate on the obvious ones. They're losing revenue and increasing expenses. So what are increased expenses? Well, having to fix this disaster, you might even have to pay some ransom. I don't know if that was part of that equation. So, I mean, it's a mess. Cyber warfare is no joke. So anyway, I don't have any interest in that. But look at LBS, Win. Yeah, the whole sector's getting killed. Hotels, C's, 6. Yeah, I mean the whole leisure. There's no interest. All right, so MGM, I don't care about. Yeti was up $1 earlier. You see it up here, gap into this this resistance. So I had it on my list. If it could take out a 30-minute high, that would be a great zero DTE put spread. Down a lot. Possible wide range ending on support. 30-minute high. Let's go through the checklist. Michael Dell was on CNBC. Wow. The fact that this big old gap has not filled any of the gap yet is very strong. But I don't see any pattern there. He was talking about AI and stuff. On WBA, we've been in all week. Now we have some long calls that expire today. So I'll be, if it closes strong, meaning stays above Wednesday's low, I'll be looking to roll that to next week. TTC, I gave as a put spread yesterday, did not get filled. And because of the gap down of the market, I can't tell where it's trading. I sent out a new alert saying, make sure at least it trades above yesterday's close. Only reason I did that is to make sure we don't have a big gap on our hands down, and then I don't want to be filled. And TSM, I forget what the news was, gapping up a little bit. This could very well set up for 0 DTE and a day trade directional. PHG down a lot. I don't know if they pre-released or what, but ADR. Oh no, these three got upgrades. That's what it was. No, my bad. That one was earnings. These three are upgrades. BHP. Look, that's just the nature of ADRs because they trade overnight in the foreign country, and then they come here and we got to catch up with their closing price, and that's what causes the gap. So I have no interest in that pattern. Rio, I just slop. No interest in either one of those. Crowd. Oh, these are just leftover from yesterday. This is not news oriented. See, it was up. My alarm went off this morning. And now it's down, so no interest. Now was on my list for bottoming pattern put spread. I'll leave it if it can get back above yesterday's high. Aichi gave us these two yesterday, BTU. As a buy setup. Let me set a new alarm. My alarm went off this morning at 24:20. I must set an alarm. And so this is gas related. Look at UNG. Look at UNG posted a move yesterday. Nice breakout daily, weekly, monthly. I looked for a put. There was no juice, but if we can get a inside bar, that'll be a 1, 2, 3 for Monday. Now this, you know, I always do this A/B test in the green room. So BTU versus VIST, I think the same sector. VIST is superior. Why? Well, many reasons. We have a deep green bar into Wednesday's bar. We have a bullish end of day base on the 15-minute chart. It's actually if that, you know, I'm assuming it's gapping up a few pennies here. It broke out, reversed on minor support. I got rising 20 above 50. Look at BTU, it came down much harder, closed with a topping tail, and is not gapping up. And it has a lot of resistance in the 15. So that's a fantastic example of our A/B analysis. And we did an MT Live on that a couple months ago. Sam I Am gave me this. I was hoping I would have an inside bar yesterday. Then we would have traded a 1, 2, 3, target $8. But it didn't wait for us. Crack oil. Now it's beat up. It's in an area of where it should turn, but we have no potent reversal yet. So I need like a bottoming tail. I need a gap reversal, because otherwise, look at this 15-minute chart is in a steady downtrend. All right, good, Robert. We actually sold puts on XLE yesterday that expire today, the 84s. So they, as of right now, they look great. Let me set the alarm at 85, because I still think even if it goes to 85, we should have an open profit. And I'm not going to turn that into a loss. Oh, Amazon, I sent an alert out. We have a call spread. And it was acting a little bullish yesterday with the bottoming tail. So I sent out an alert saying, let's close half 5-minute high and then break even half. Back up. Dollar Tree Retail's been getting whacked. I sent a telegram yesterday to our advisory letter saying it now is worthy of watching. It's a Climo on the weekly. That's a textbook Climo. Fluid, far accelerating from the 20, bullish reversal. This is what we call a bullish new low divergence. It made a new low, but not by very much. So by definition, selling has eased. Let's set an alarm at 106.50. That's Hershey. Yeah. See, I had one yesterday, 105.20. See that? ANET over yesterday's high. I like it. Let's set an alarm at 188. So it's going to have to prove itself to reverse this pre-market weakness. PCAR. All right, good. I was hoping for a 1, 2, 3. It's a deep gap. It's gapping yesterday's low. Let me set an alarm 86.55 if it's able to recover. Then the pseudo 1, 2, 3. Hershey's been getting killed. So it's not ready. Hey, Robert, here's another A/B test, just in terms of Climo. Compare Hershey's to Dollar Tree, except different sectors. But there's 15 Climos I've been watching. Pod said, "Gee, look, they're nowhere near. I'm setting up a turn." Delta 20. Is Coke and Pepsi also a Climo? Excellent question. The answer is yes, but it's not the nice fluid ones coming down. So this one attempted to stabilize, but it's not a Climo because it didn't accelerate lower and there was no reversal. And the fact that this thing tanked, wow, this thing's ugly. I didn't notice that. We actually were short this Delta 20. It was in our advisory letter 2 weeks ago, right here. And we actually stopped out on this little green bar when it took out a 5-minute high yesterday. Man, we left some money on the table on that. So the answer is it could be getting close to a wide range. Yeah, that's just gonna say. It could be close to what we call a wide range ending, which means it's the biggest range expansion thrown in the towel after a climb up. So it's worth putting on an interest list. And let's see, you asked about Pepsi. No, this one is not. So the A/B test you heard me talking about, in terms of a counter trend move, Coke is superior because this broke down from a 6-bar attempt to stabilize. So for a swing, Coke is superior once you get a bullish turn. It's not ready. All right, good. Those were a couple good examples. Here's some other Climos I've been watching this week. Let's see, this was an attempted one and it gapped up on Wednesday and failed. So, that throws a little kink in the setup. NAE and NEP. Now see, this one in terms of a Climo, once I get a reversal is better because the fluid bars down far from the 20. So all we need is a bullish turn. All right, this AEHR. All right, we're spreading. All right, so we're about break even on this AEHR. I thought we would have a better gain. And part of the reason is because they're 2 weeks to expiration, so you don't get the same volatility contraction, and that's why we love doing. We love shorting options on weeklies. 42 XLE.